What is going on, investors? Back again. Time to talk about PepsiCo Corporation, ticker symbol at PEP. Over the last year, this stock's up 11%, but take a look. We are hitting 52-week highs on PepsiCo. When we get over to the stock chart on this one, it's been on a monster move after being in a sideways consolidation action for over a year. This stock has been sideways consolidating. We'll take a look. It absolutely broken out, and it is broken out to the upside. Now, for some people, it might be time to sell. But sometimes when you have big breakouts like this, it's actually time to buy. And so we'll talk about that as well. Now, one of the reasons, or really the primary reason this thing is breaking up, is it had a monster quarter in Q2. We'll talk about this here in a second. And they raised their guidance as well. So we'll take a look at PepsiCo's earnings. We'll jump into the numbers here. Now, they raised their full year guidance, but I think what has investors really excited is this revenue growth. Take a look at this. In the second quarter, they grew their revenues 20%, not quite tech-like, but very, very close, okay? And this is like a company that has been around forever. They also pay $4.30 per share. That's about a 2.8% dividend yield on this one. Only a 24 forward PE on this one. That is not tech-like. So you're getting tech-like growth, a dividend, and a valuation that seems reasonable. Boy, I can see why this stock is moving today in the regular session. So year to date, they're up 14%. It was a fantastic quarter, grew 20%. Now they got this organic revenue growth down here. Now this is not organic Quaker Oats or organic Lay's chips if they make that, or organic Pepsi. The way PepsiCo and Coca-Cola in general, the way these companies grow is they acquire companies, okay? What they do is they let all these other brands kind of incubate and kind of do all the hard work, grow a brand, get the startup. PepsiCo actually doesn't grow a lot of their own brands. They just acquire them, okay? They let little startups, they let them mature a little bit. And once they get big enough, they offer them some money and they buy them, okay? Now, what organic revenue growth, it's kind of strips all that out, okay? It's just the brands that they had in their portfolio. Pepsi, Lay's, Tropicana, Quaker, Gatorade, those types of brands. Look at this. In the second quarter, those brands grew 12.8%. That's fantastic. And if you couple that with acquisitions that they'll make, not only in the recent future, but in the future as well, boy, the future looks bright for PepsiCo. Now, let's jump over to the statement of income. This is essentially profit and loss. We've got net revenue here on the top line. We'll work our way down to the bottom line down here at net income. So we've got our net revenue here. We've got our 12 weeks ended here. We've got right-hand column is last year. This left-hand column is the most recent quarter. We see net revenue went from $15.9 billion to $19.2 billion. I want to wait here for a second. This is what I want you to do. Okay, this right-hand column is 6/13/2020. I want you to rewind yourself back to June of last year. What were you doing? From March to June, you were stuck at home. You were eating at home more. You were shopping at the grocery store more. You were doing those types of things. People were stockpiling. They were going to places like Costco and just stockpiling stuff like Pepsi, like Quaker Oats, like bags of chips, those types of things. It was a fantastic quarter, okay? It was a fantastic time to be in Pepsi's business, and they did $15.9 billion. Now I want you to fast forward between March and June of this year. You're probably going out more. You're probably spending more money out, maybe on vacation, those types of things. Take a look, we're still growing our revenues. That's what's so impressive about this quarter, okay? The reopening has happened here in the United States and broadly across the world, and we're still growing our revenues by 20%. That's super exciting over at Pepsi. Now, what I love about Pepsi, in full disclosure, I do own a couple shares of Pepsi, is it's not quite tech-like from the gross margin perspective, but it is somewhat. Now, I'll explain why I am so heavy on tech in my portfolio is I love high gross profit and gross margins, okay? Because what it allows you to do is have huge margin for error. It allows you to make acquisitions. It allows you to flow lots of money down here to the bottom line. Because if you have really high cost of sales, it doesn't leave a lot of room to pay taxes, to pay interest, to pay employees, to pay surprise expenses that happen to come up. But take a look look at Pepsi. Okay, we spent $8.8 billion on our cost of sales to make $19.2 billion. That gives us a gross profit of $10.3 billion. Okay, so we had $19 billion in revenue. $10.3 billion of that flows down to the gross profit side. Now, that's not quite as juicy as a Microsoft or something like that, but that is really, really good. And we see here for the 24 weeks, we got $34 billion in revenue. 18.8 billion of it, 18.5 billion of it flows down to that gross profit side. Now, not the full story. Okay, we got to pay our employees. We got to, selling, general, administrative, marketing costs. Those come at $7.2 billion. That still gives us operating income of $3.1 billion off $19 billion in revenue. Last quarter, we're sitting at $2.3 billion. So we bolted on about $800 million just in the last year on our operating side. Okay, now we've got some other things that we've got to pay that flows us down to net income. We'll come all the way down to the bottom line here. $2.4 billion flowing down to the net income side of $19 billion worth of revenue and $10.3 billion worth of gross profit. This is about as good as you get when you don't look at the tech sector. I love this. I am absolutely in love with what I'm seeing here. Now, let's keep flowing through this report. Now we've got our kind of subsidiaries. We get a look at Frito-Lay, Quaker, PepsiCo, and then some regions as well. Latin America, Europe, Asia, Africa, Middle East, and then we've got more of Asia and Australia and those types of things. Take a look just across the board. Frito-Lay up. We've got Quaker down. Okay, we talked about this. I remember the last time we analyzed PepsiCo is people were eating breakfast at home. Okay, they weren't grabbing a Starbucks or a McDonald's or something like that. So Quaker actually benefited from the stay at home, and we see evidence of that kind of pulling back. But take a look at PepsiCo beverage. Went from 4.9 to 6.1. It seems like people are like getting out, and it makes them want to drink Pepsi a little bit more. Really interesting there. Latin America up nicely. Europe up nicely. Look at Africa, Middle East, and South Asia. They are loving their PepsiCo products. We went from 983. That's almost like doubling. That is fantastic. And we've got a little bit more of Asia and Australia and other regions there also up. And then we're seeing it follow through on the operating profit side as well. This is what I love about like mature businesses like this, is that we grow these revenues. And that's great. You have revenue growth. You sometimes see it in tech where you grow revenue, but your operating incomes are going down because they're just burning through a bunch of cash. That's not happening over at Pepsi. Okay, and they are generating nice operating profits. Take a look at where we saw the big growth. This is what I like to do is when I see big growth. Okay, we went from 983 on the revenue side in Africa, Middle East, and South Asia. And we went to 1.6 billion. Well, I'd like to see follow through that on the operating income side, and we did. We went from 59 million up to 256 million. So if you continue to see this type of growth, it should impact our operating income even more over at Pepsi. Now, from a cash flow perspective, this is our cash flow statement. So we get to pull down this net income. We're looking at 24 weeks here. So when you come back up here, you got our 24 weeks here. You pull down this net income number, okay? And this factors in some non-cash stuff, depreciation, those types of things. Our net income is $4 billion and a little bit of change. So we get to come down here to cash flows, pull that number down. So here's our $4 billion in change number. Last year, we're sitting at $3 billion. We get to add back in some things like depreciation, some other things as well. Some things get stripped out like accounts receivable and things like that. That gives us our net cash provided by operating, just the cash by operating Pepsi business. $2.3 billion. That's almost $1 billion over where we were last year. So it's super steady business. You see that they grew their net income by about $1 billion over the last year on a 24-week basis. And that flowed down to the cash flow basis as well. So you'll love to see that. Now we've got our capital expenditures here. We see that ticked up just slightly, but nothing really. You'd actually like to see this. Okay, I'd like to see that with a growing business. You're growing your business at 20% year over year on a quarterly basis. I don't mind investing more in that. Now, we come down here at our financing activities. What was every single company doing this time last year, right around June of last year? They were withdrawing on their long-term debt. They were going to JP Morgan. They were going to their investment banks and saying, hey, we need money. We're going to shore up our balance sheet. So they pulled forward $10.5 billion. But what they've seen over the last year is obviously their business has just blown up and things have been going great. So they've been able to repay that debt over the last year as well. We see our cash dividends paid. We see evidence of it likely increasing over the last year as well, because we went from 2.6 billion in payments up to about 2.8 billion. Now, finally, we get down to our balance sheet. So we've got our cash and cash equivalents sitting up here. This left-hand column is the most recent quarter, at least when these financials were reported. And this is like the end of December or the day after Christmas, essentially. So we've seen that cash has ticked down a little bit, evidence of that they're repaying debt and increasing the dividend to a certain degree. We do have a little bit more on this accounts receivable as well. Blended together, you've got a shade over $15 billion worth of cash and receivables as well. Now, they do have these inventories as well. I actually would like to see these up a little bit when you have the business growing like this, 20% in the quarter, organically 12.8%. When you see that, I actually like to see inventory tick up. It's when you have sales kind of flat or kind of down, I don't like to see inventories tick up. This goes for a Nike, an Under Armour, Lululemon, Peloton, those types of companies that have inventory goods. When you see sales start to slip or stay flat, you don't like to see inventory tick up. But in this case, when you've got this growth right here, I actually don't mind this inventory ticking up because they're going to have the inventory in place to sell in the most recent quarter as well. Total assets basically flat as well. We've got a little bit of long-term debt here as well, but we actually see they've managed that very nice as well. Okay, some of it looked like it ticked over here to the short-term side, but they've managed this very, very nicely. Now, speaking of nice, look at this big green candle. You don't see this, but look at this. This is a big old chart. And now obviously we had some virus stuff here, big actions in the volatility in the stock market, but you don't really see, look at this big green candle. So I'm going to zoom us in over here. We've been sideways consolidating with Pepsi for a while, but what I want to show you is take a look at when we see big candles show up. Look at these big candles show up with Pepsi. Well, this was back at 136, and I bet people would say, well, it's time to sell. It, broke up. And they'd probably be saying, hey, time to sell here at 142. Well, it's bolted on even more. So sometimes when you see these big green candles, now other times it can create a reversal pattern, but when you see these green candles show up, not only that, but we've broken to new highs on PepsiCo as well. Okay. And so sometimes the momentum gets behind this. I'm speaking from a tech perspective as well. This is very, very true with tech. When you break above like a previous range that you haven't been able to get above, we've seen it with Facebook, seen it with Google. We're seeing it potentially with Amazon as Apple as well. When you break above the top end of your consolidation, sometimes these things just want to run. And so what I personally would do with PepsiCo, if you want to sell it, say you had it in your portfolio, you want to take profits, set a trailing stop here. Okay. I wouldn't get alarmed with this one until it starts to pull back to this. I drew this trend line in here. It's not perfect. You can probably bump it up to something like that. Pull back to this trend line. I wouldn't even be alarmed. Okay. Where you want to probably initiate some kind of sell is when you break this trend, okay? When this upward trend is broken, okay? From right now, this trend is intact until it's not, and this thing will continue to move higher, in my opinion, until you see this trend break. So I'd let this thing run. You could jump in here and play a momentum trade. A pull back to this trend line can trigger a buy because you're anticipating it bouncing off here and moving higher. So that's kind of what I see with the PepsiCo chart. Looks super strong. It's a buy and hold investment for me. I'm collecting those dividends, seeing this growth. They will make more acquisitions in the future. Super strong company. Enjoyed this one. Hopefully you guys did too. We'll be back again soon with more videos here on the channel. Good luck with your investments.